couple quick questions. How many people in this room have raised money? Raise your hand. Okay. How many people in this room want to raise money? Okay. How many more people are more confident about raising money after the Supercell news today? Okay. All right, so I'm just going to give you a quick summary of myself. I'm originally from Canada, based in London. I've been working as a banker, advising game companies since 1999, way back in the console days. So I've worked with a bunch of companies that are listed up there, just in the first section. And one of the deals I did was Unity's Series A round from Sequoia. So through that, I became a shareholder in the company. 3 years ago, I set up London Venture Partners with a couple of guys, and our first deal was Supercell. We invested in the seed round. And so we've gone on to also invest in a few other companies here in Finland and also in the UK. And my two partners, one is David Gardner. He was the 12th employee at EA. He was there for 25 years. Amazing insight into people. And the other one is David Lauki. He was the founder of Criterion, which was the leading middleware company which EA acquired back in 2004. So here we go. So this is what I'm going to talk about. I'm going to whiz through it pretty quickly because I got less than 30 minutes. So I'm just going to give you sort of a high-level overview about funding. So, forget 2013. I'm going to talk 2012. There was $1.2 billion raised. That's the split. So you can see online was the majority where the money was going into. And have a look at PC and console, 0.1%. If you're doing console games, I don't think you will ever raise money ever again if that's all you're doing. Investors just don't like that sector. And that, I guess a quick way to sum it up is if someone can invest in €500,000 into a game company, they want to invest in a company that's going to give them the fastest return and have the highest probability of a return. So with mobile games, you know how you can make games in a matter of weeks and months. Console games take years and millions and millions. And so there's been a big shift. And I think in 2013, you're going to see the green piece of pie, mobile, take a even bigger share. So that's a lot of money. Well, how does that compare to previous years? It's not as big as 2011, but there's the interesting part is I've split it out. So you got the blue is North America, red is Europe, and green is Asia. So it's been about $1 billion, over $1 billion a year since 2008. That's a lot. So that's more than half the money since that whole time frame going back to 1997. So what's happened in the past few years? Why are VCs investing more now? This is what it's all about for them. And the Supercell deal as well is the ability to scale very quickly in digital, both online and mobile, is possible now. You couldn't really do that in the console days. 2011 was sort of a special year because you had the IPOs of Nexon and Zynga. Obviously, things have changed at Zynga, but it's going to be an interesting year for 2013 and what those numbers look like now. But top line, $44 billion of value has been created for investors and the founders and VC-backed companies since '97. That's a lot. So what is the fastest growing area in the sector? If you don't know this, then you shouldn't be here. It's mobile. It's a 10 billion plus market now. It's going to be 30 billion plus in a few years, and it's moving quickly. It's the number one activity on all smartphone devices. So the game sector is big. But if you want to raise money, you have to realize that VCs want to have big returns. And so they're looking for people with a big vision, not people who want to just make a copy of Clash of Clans or Heyday or whatever the latest and greatest game is. So if you add up all the companies that are public in the game sector right now, and take their whole valuation as public companies, it's $240 billion. It was maybe 20% of that a few years ago. There's been a huge amount of value creation. The biggest part of that's probably Tencent with like its 100 billion market cap, because more than half of its revenue now comes from games, and that wasn't the same a few years ago. So we've talked about funds raised. Total exits and IPOs in 2012 was 5.7 billion. And I think particularly today, everyone can sort of agree that the sector's pretty hot now, thanks to Supercell. So this is pre-today's announcement. But even Supercell's deal earlier this year where they sold some shares to more investors was the biggest deal in Europe. And obviously today's deal is the biggest deal, again, ever in Europe. And it's probably one of the biggest deals in the West in the game sector. But I think what this slide can tell you is that there's been a fair amount of success in Europe. And I think we all know that there's a lot of talent in Europe. There's a lot of talent in Finland. So there's a potential to make money, and that's what investors are looking for. So reasons to think about why you should raise money. It's not to buy a Ferrari or, I believe I've heard this answer. Investors want to hear, what are you going to do with the money? Let's say you're going to raise €1 million. What are you going to do with it? These are interesting answers. You want to hire a team, you want to just get the company started, you want to go acquire or acqui-hire some company, or you just want to make a great game. These are answers that VCs are really looking for. And if you can't honestly answer with these types of answers, you shouldn't be talking to VCs because it will be a complete waste of time. I'm pretty direct, but I'm very honest. So, it's about building scale. It's about being very profitable, but it's always thinking with a big vision. So, I think there should be a lot of learning that people can take from Supercell, because not only are they the fastest growing game company in the world, but they may be the fastest growing company in the world right now. And you need to be thinking about that way. How quickly can you scale? You need to make decisions lightning fast. You need to hire people quickly. And when you go to raise money, if you've got these types of visions and aspirations, then talk to investors that are going to be able to bring you more than just the money. You want to get investors that are going to help you to, they can bring some value out, whether it's they know how to recruit some good people, they can introduce you to some interesting partners, they're going to give you ideas on how to get more traffic or make better games or whatever. I think the unfortunate part is a lot of VCs don't understand the game sector, so that's another challenge. But if you're going to even think big enough, how can you disrupt what's happening out there? So, don't think about, I want to be the next Supercell. I'd stop you right there. Try and be the next, but be something original. Whether it's going to be an original game vision, platform, technology, whatever it is. But try and be the best, the biggest, but don't copy. I think what Pateri was saying earlier about Clash of Clans Android version, just eating the lunch of all the copies on the Android markets. It's true. Copies don't work long term. Short term, sure, but long term. But the big point here is you have to think big. So use of funds. Let's start with bad uses, and I've seen all of this. I think there can be learning from some different success stories, but I won't go specific. Is when you're going to raise money, try and get the most runway for that money that you can. So it's not about paying people like market salaries. It says, what kind of salaries can people take with stock options that will help you get to that first launch of the game and start generating revenue? So it's very easy to spend money. It's very hard to get money, whether it's raising or making the revenue. So you have to be really, really pragmatic and very cost conscious, and just really guard that money that you have, because it will go very quickly otherwise. So don't even think about the bottom ones, but try and get the best team. That's the most important thing that you can do. One of the learnings from Supercell is not every company ends up the way it starts. They pivoted from online games to mobile games, but they had a great team, so they were able to figure out that way. So don't focus on how great a game you're going to make, but focus on how you're going to put together the best team. And you'll figure out everything else eventually. But that's what really matters. And I think the other reason to raise money is to scale faster than you can on your own. If you look at how fast mobile is changing, you need to scale fast. Otherwise, you're just going to be standing still while the rest of the market goes flying by you. And you want to be able to take some risks. Maybe try and make more than one game at a time, or 3 games at a time. It just gives you more optionality to be successful. So are you ready to raise money? Because I'll tell you right now, most people aren't. And another point is that most people won't raise money. We've looked at over 1,000 pitches, and we've invested in 6. And that's probably pretty standard for VCs. Angel money is different, but that's okay. So have you already developed a great game? Have you got a track record? Has your team got a track record? I mean, what can you say to prove that you've got some experience of some sort? Have you got more than one game, or are you thinking more than one game? VCs don't want to invest in one-game wonders. They want to invest in companies that are going to build a portfolio over time. Maybe slowly, but over time. Have you got some sort of stats to show that either the category that you want to enter is one where there's a lot of money to be made? Have you already launched your game? Have you got growing user numbers? Are you generating any revenue? I mean, what have you got to show people that is going to impress them? Do you need to add to your management team to beef it up? Or what kind of customers or partners? I mean, mobile's a bit different. Basically there's, here in the West, you've got Apple or Google. If you go to China, there's like 50 different Android markets. It's the Wild West. Business model, have you got something that's a bit different? Can you change? Can you come up with something that is going to completely revolutionize free-to-play? Something to think about. And again, just sort of the stats I was talking about with the analytics. Have you got anything to share? So there's all kinds of different types of investors. There's seed, or if you're raising less than 2 million euros, there's a fair number of seed funds. There's angel investors. Who do you know that might know someone? Series A round, that's sort of 2 to 10 million euros. That's traditional VCs, some strategic investors. And then anything beyond that, Series B plus, is 10 million plus. That's sort of growth stage private equity. So some of the things that people forget about when they're raising money is it takes up a lot of time, but you can't lose your focus in growing your company. Because if you lose focus on that, then the company can fall over while you're trying to raise money, and it's got to keep executing. Execute like rock stars. And be realistic on the size of your funding round. And I can't tell you how many times I get complete startups. They have nothing. They got 3 people. They got to build a company to $1 billion in revenue, and they want to raise $20 million. And I just ask them, what have you been smoking? Because it's just never going to happen. When you're tiny, I mean, think about what what's the minimum size you need to raise, and just be realistic. Because investors like working with realistic people. And you need to raise it, but you also need to raise enough to execute your plan. So whatever the number is, whether it's €500,000 or €1 million, if it's realistic and you can demonstrate why you need that money and what you're going to do with it and why it's going to get you to post-launch and it's going to have some money left over for marketing and traffic acquisition, then that's something that's defendable. If you're actually growing quickly and you're profitable, there may be opportunities to also sell some of your shares in a VC deal that will give you some liquidity so you can take some chips off the table and be willing to take more risk with your company. Crowdfunding is become a really hot topic these days. You know, there's been a lot of, you hear about all the success stories in Kickstarter, you don't hear about all the failures in Kickstarter. And there's also Indiegogo. You know, if you can raise money on there, great, but keep in mind that any money that comes from there, there's zero value add from anyone who's giving you money on there. But if you're smart and you got a profile, then maybe you can raise money on there. There's a ton of incubators all over the world. You know, I think we've all heard of Y Combinator. Here in Europe, there's the big one is Seed Camp. And there's all kinds of them. I'm not going to go into detail about them, but if you're considering that route, just ask them, you know, how many successful game companies have started there? The unfortunate answer is most of them will say zero. So you really have to do your due diligence and who you're going to partner with in any way. So angel investors, you know, just really think hard about, you know, network, go through your friends, go through your family, just go through your network, go through LinkedIn. You know, there's an amazing thing out there called AngelList. And if you haven't heard of it, Google it, because it's sort of changing angel investing globally. You know, it's so many companies have gone on there and just raised anywhere from $50,000 to $1 million in a matter of days. Mind you, you need to network on there too. Government funding. Well, we're here in Finland. You got Tekes. Like I said, it's the best program in the world. There's some other countries have some other programs, but none of them are as good as they are here. So I don't think there's much more to say on that. Seed funds. So Pateri's been up here. You know, they've done really well at Lifeline. They've been very active in the game sector. They were investors in Supercell, so he's a happy guy today. In the U.S., there's a company called 500 Startups, and they have invested in over 500 startups around the world. They've been pretty active in the game sector. Initial Capital is the founders of Playfish. They were also investors in Supercell. And they've been investing in several other startups. London Venture Partners is my group. We were also investors in Supercell and the other companies listed there. VC firms. So again, you know, this is just, I'm just doing summaries of companies that have been active in the game sector. There's thousands of VC firms around the world. I think what's most important is, can you find people that you can connect with, share some common ground, you believe that they can sort of bring you some value add, and you're not going to have to get divorced at some point, because that's a nightmare. But these are some of the ones that have been active. The thing to keep in mind is Google Ventures is not investing outside of the US. It's just a strategy that they've taken. All the others will invest in Europe. Sequoia won't invest at the seed level in Europe, probably a more Series B area. Insignia's has done, I think, 1 or 2 in Europe. And then there's also the European Venture Capital Association, which you can Google and you can find more in there. And I'm sure there's a Finnish Venture Association, but there's not too many VCs here, though. So private equity and growth equity, you know, once you sort of get to like serious growth traction, these are some of the companies that have been investing in the game sector. You know, I guess sort of the most interesting deal in there for you would be Big Point. TA and Associates and Summit Partners, two fairly big American growth equity firms, acquired a majority share of Big Point for $600 million plus, I think it was 2 years ago, in Germany. So strategic investors, are you working with, or are there any firms out there that you think can bring you some value add? So for example, I don't know if any of you remember Jamdat, way back when, sort of the very early success in mobile games. They got an IP out of Activision in return for giving Activision some stock options. And Activision did really well because the company got sold for $680 million to EA a number of years later. So there's all kinds of ways to structure it, but if it's a deal where you're not actually getting any cash, then whatever you give out, try and keep that very low, because you want to maximize the percentage that you as founders keep, because you're the ones doing all the work. So you're probably not going to be able to read all of this up, from where you are, but it's basically, it's a mix from console game companies, online game companies, strategic VCs, TV broadcasters, hardware companies, internet companies, media companies, mobile game companies. There's all kinds of potential strategic investors, and they can have all kinds of different reasons why they may want to invest in a game company. Probably the most active one is Nexon. They've been doing a number of deals all over the world. They're looking for companies that have actually got revenue and got games that have got traction. But all these companies are finding that games is an interesting place to be. So fundraising. So what should you've decided you're ready to raise money, you're ready to go out, and what do you need to be thinking about? How long is it going to take you? I usually tell people 6 months, but deals can get done a lot sooner. Sometimes they take a lot longer. It just depends. When we were out trying to raise money for Unity, we went out in August 2008. In September 2008, Lehman Brothers went bankrupt, and the whole bank sector almost fell down. So it ended up taking us 9 months to do the deal, but we got the deal done at the end of the day. So let's say you want to raise €1 million. How much are you going to be willing to give up with a company to raise that? So, for example, if you were willing to give up, say, a third, then the pre-money would be €2 million. Post-money would be €3 million. So you need to think about those things. Obviously, you want to give up as little as possible, but ultimately the market will pay whatever you can get. So the more investors you have at the table, the better the deal that you're going to be able to get. So you need to think about how do you manage this versus running the company. How do you communicate with staff so at least they are aware or not aware, and how you deal with that. And if you're going to get yourself advisors, just get people who've done this before, can help you. Even if you don't get a financial advisor, get yourself a good lawyer who has done VC deals before, because the details matter, and the term sheets and the legal documents. And if you just think about all this in advance, and you just be better prepared when you go out and do it. The other thing you can do is, can you get some sort of independent board member who has some experience in value add, helps raise a profile of your company. So again, don't try to raise this, but this is like a typical 6-month timetable for a VC round, from putting together an info memo to actually finalizing it, and it's cash in the bank. There's a lot to think about, and it's a lot of work. It's literally a full-time job. But if you got investors coming to you, then you can probably close it a lot quicker. So you're in the midst of raising money, and then you're hoping to keep it confidential, and then it becomes public. How do you deal with that? Will it affect the round? Will the investors you're talking to get nervous? What happens if one of your key team members leaves? Or what happens if your games are delayed? Or you're just not hitting your milestones, so revenue is not coming in like you expected, or there's another economic crisis. There's all kinds of things that can happen. You just never know, but you just have to deal with things as they come along as best as you can. But most important point here is if you get a signed term sheet with an investor, don't screw with your business model. I've seen companies that have done that and they've lost the deal. Investors just walked away because they messed up the revenues, and you just don't mess it up. It's just keep things steady until the deal closes and cash in the bank, and then if you want to mess around with the business model, do what you want, but not in between signed term sheet and closing, because that won't do you any favors. So if you're going to put together some type of summary to share with VCs, these are just a few key points. Keep it short, no more than 5 pages. No one's going to read more than that before they meet you. I mean, they may not even read that. But you just want to summarize what is it that you want to do, what's your vision, who are you, what's your background, summarize the team, products. I mean, have you got some screenshots? Have you got a demo? Have you got a trailer? Have you got visuals? Really would do work. And if you got great visuals, then you want to show them. Have you got some really interesting, unique, proprietary technology that could change things? How big is the market for your specific category or genre or whatever it is that you're going after? If, for example, you're going into shooter games, how are shooter games monetizing? How big do you think the market is in terms of shooter games based on what you see on App Annie for iOS versus Android, and maybe even specifically, what are the key countries that you're going to target? Are you going to do just iOS and Android? Have you thought about working with Line in Japan, Kakao in Korea, WeChat in China? The channels are changing. In fact, I was just reading earlier today that Line in Japan, which has almost 300 million users, is now planning an IPO of $28 billion later this year. I mean, the numbers are staggering. And so going back to that, when you analyze the market, is who are the key competitors in the shooter category? And why do you think your game is going to be better than what's out there? And then once you know that, you want to get it out as soon as possible because you have no idea what's being developed by other companies. And have you won any awards, and what do your financials look like, and what are you going to do with the money? This is sort of just summarizes a lot of what I just talked about in terms of presentation. Have some sort of financial model, even if it's very basic. People want to know that you have thought through how you're going to make money, how you're going to get users, how much it's going to cost you to get users, or you just think you're going to get them all virally. What kind of PR are you going to do, and is that going to cost you something to hire a PR firm? You've really got to think through all the details. But the key thing is the whole revenue build. Are you going to go paid app? Are you going to go free to play? And how is that going to be reflected in your business model? So if you're talking term sheets with people, keep in mind everything's negotiable once you get more than one term sheet. If you just got one term sheet, it's a bit harder. Obviously, the more you got, the more leverage you got. If you have advisors or someone who's been through it before that can help you, then to use that, because it will make a difference. If you're doing a seed round, you don't even need to use the lawyers if you want. Just go to Seed Summit. It's a website, and they've got basically open source documents you can use right there, and you just need to change a few blanks. But timing's everything. Don't push too hard for a term sheet too fast, because investors will walk. You just need to sort of push it at the right time, and then ideally you'll get multiple term sheets altogether. These are the key terms to worry about. Most important is valuation, dilution, liquidation preference. If there's a sale or a company goes bust, how much money does the investors get first? Voting rights, lots of things to think about. So you've signed the term sheet. Your investors are going to do some type of due diligence. I mean, have you been to jail before? Or, they need to know who they're investing in. So whatever it is that you think they might be nervous about, be transparent, because be open about it. Because if they find out after investment is done, they will sue you. Like, you've never seen before. So just no surprises, and just be completely open. It's not the most comfortable thing, but that's how you get great partners. Shareholders Agreement, again, if it's a seed round, use the seed summit documents, otherwise have a good lawyer. It's just an extension of the term sheet, and it has, talks about all kinds of different things. So a good case study is Unity. So I met them when they were 10 people. They had been trying to raise money for years. I helped them with the Series A round. And it was interesting because we first started talking to U.S. and to European investors, and they were just very slow. And then they started getting calls from U.S. investors because that's where more than half the revenue was at that point. And we did a couple trips there, and we ended up with 5 term sheets. 4 of them were from the U.S., 1 was from Europe. We ended up going with Sequoia. And, they went on to be very successful. They raised a Series B round 2 years later, and it's the #1 game engine in the world. And when they did the Sequoia deal, David, the CEO, moved from Copenhagen to San Francisco. So that's another thing to keep in mind. If you want to go talk to U.S. investors and try and get a big fund and have a great deal, don't even consider it unless at least you as a CEO is prepared to move to the U.S., because they just won't waste their time for most of them. I mean, for a lot of them in Silicon Valley, unless you're going to be within like a 35-mile drive of their office, they're just not interested. They got a choice of the best companies in the world on their doorstep, so that's what you have to think about. Closing. So once the term sheet's signed, you want to get that deal closed ASAP, and just don't be afraid to push the investor, to push the lawyers. Just keep pushing until it's done, and then share the news with the world. That's my details. If you want a copy of this presentation, just I'm sure Suvi can get a copy to you. Any questions? All right. Thank you.